Have you ever felt like you're on the outside looking in when it comes to money? Like everyone else got a rule book that you just didn't? Well, today we're changing that. We're going to pull back the curtain on the stock market, which is one of the most powerful ways to build real wealth. So if you've ever felt confused or left behind, consider this your official invitation to the conversation. You know the feeling. It's late, you're scrolling through your phone, and there it is again. Someone you know, maybe someone your age, living a life that just seems so out of reach. And that little voice in your head asks, how are they doing that? That feeling, that financial anxiety, that's exactly where we're going to start. Here's a secret that most people don't realize. The biggest difference between people who are financially secure and people who are stressed isn't always their salary. I mean, we all know people who make a ton of money but are still living paycheck to paycheck. The real game changer is understanding how to make your money start working for you instead of you always working for it. Okay, take a look at this because this is so important. You've got money in a savings account, which is great, but it's earning next to nothing, right? Maybe 0.5%. At the same time, the cost of everything, gas, groceries, rent, is going up by about 3 or 4% every single year. That's inflation. What that really means is your hard-earned money is slowly, silently losing its value. It's like having a tiny, invisible leak in your wallet. So how do we plug that leak? Well, this is where we have to shift our whole mindset. A lot of people hear stock market and think of a casino, a place for wild bets and crazy risks, but that's not what it is. Investing is about ownership. When you buy a stock, you're not just playing a game, you're buying a tiny slice of an actual business, like Apple or Coca-Cola or whoever. You become a part owner in their success. All right, so before we get into the how-to, we need to clear out all the mental junk that stops people from even starting. Fear, confusion, and a bunch of myths are the biggest roadblocks out there. So let's just tear them down one by one. Let's start with the biggest myth of all, that investing is just a glorified form of gambling. Look, gambling is about pure luck. You roll the dice and you hope for the best. Investing, when it's done right, is the total opposite. It's about owning a piece of a real company that makes things or sells services. It's based on long-term growth, not a short-term. And then there's this classic excuse, oh, I'd love to invest, but I'm not rich. For decades, people thought the stock market was this exclusive club, a playground just for the wealthy. That idea is so outdated. Let's put that myth to bed for good. $50. Seriously, that's all you need. In fact, you could probably start with less. Thanks to new technology, you can buy what are called fractional shares, which means you can own a piece of even the most expensive companies on the planet for just a few dollars. The real power isn't about starting with a lot of money, it's about starting soon. What about this one? The idea that you need to be some kind of Wall Street wizard staring at complicated charts all day, using secret formulas to make money. That whole image is really just a myth. It's meant to be intimidating, but the reality is way, way simpler. You want to know the real secret? There is no secret. Honestly, simplicity is your superpower here. The people who do the best over the long run aren't the ones making a million trades a day. They're the ones who invest regularly, stay incredibly patient, keep their strategies simple, and learn to just ignore all the day-to-day noise and panic from the headlines. Okay, let's talk about the big one, the fear that wakes people up at night, the idea that you could invest your savings and then, poof, it's all gone in a massive market crash. That fear is real, and it's what keeps millions of people from ever getting started. So let's look at the truth behind it. The data here tells a really clear and, honestly, a very comforting story. Yes, market crashes happen. They're a normal part of the cycle. But look at the history. Every single major downturn has eventually been followed by a recovery that went on to reach even higher levels than before. The key is having the patience to just ride out the storm. This leads us right into another huge trap for beginners, waiting for that perfect moment to invest. People think they need to wait until the market is low to buy in, but trying to predict the market's every move, it's a fool's errand. Seriously, not even the top experts on Wall Street can do it consistently. And if you remember only one thing from this entire explainer, please let it be this. It's not about timing the market, it's about your time in the market. Your long-term success comes from being consistent and just staying invested, not from having some magical crystal ball. So, we've busted the myths. We know we don't need to be rich or a genius or a fortune teller. So what's the actual path forward? Well, it's probably a lot simpler and more powerful than you've been led to believe. Check this out. This is the magic of compounding in action. Let's say a 25-year-old starts investing just $300 a month. Based on historical market averages, by the time they retire, they could have over $800,000. Now here's the mind-blowing part. Out of that huge number, only about $144,000 would have come from their own pocket. The other $650,000 plus? That's pure growth. That is the power of time. Okay, so what's the simplest way to actually do this? For most beginners, the answer is something called an index fund. Think of it like a pre-made greatest hits collection for the stock market. Instead of you having to go out and pick hundreds of individual stocks, you just buy this one thing, and it automatically gives you a small piece of all the top companies at once. And this is why index funds are a beginner's absolute best friend. First, you get instant diversification, so you're not putting all your eggs in one basket. They have incredibly low fees, which is a huge deal. And get this, historically, a simple index fund has actually beaten the performance of most professional money managers. It's the ultimate set-it-and-forget-it strategy. Now, once you actually start investing, you'll find that the biggest challenge isn't about picking the right fund. It's about managing your own emotions. It's about keeping your cool when the market gets shaky. Winning this is all about mastering your own psychology. So let's take a lesson from one of the masters. This is what Warren Buffett said during the massive 2008 financial crisis when everyone was panicking, and his wisdom is just timeless. When the market goes down, your account value goes down, but you haven't actually lost any money until you panic and sell. A paper loss is not a real loss. Patience is everything. And this second quote really reinforces that mindset. He's saying, imagine you could only make 20 investments in your entire life. You wouldn't be trading frantically, would you? No way. You'd be incredibly careful and thoughtful about each and every choice. Successful investing is about making a few good decisions and then having the discipline to stick with them. Okay, we've busted the myths, we've talked about a simple strategy, and we've covered the mindset. Now it's time for the most important part, turning all this knowledge into real action. So here it is, your very first step to becoming an investor. Seriously, in this day and age, it is this simple. First, you open an investment account online. It literally takes a few minutes. Second, you set up a small automatic transfer every month. Maybe it's just $50. This is called dollar cost averaging, and it's a fantastic way to build wealth without even thinking about it. And third, you choose one simple broad index fund, like one that tracks the S&P 500. That's it. You've done it. You're officially an investor. So let's end with this one question. Think about your future self. 10, 20, 30 years from now, what are they going to wish you had the courage to start today? Your financial future really isn't going to be decided by how much money you make. It's going to be decided by the small actions you take starting right now. The best time to plant a tree was 20 years ago. The second best time is today.